let's be honest, figuring out how much house you can afford can feel like trying to hit a moving target. Interest rates change, property taxes vary, lenders have their own formulas. It is a lot to take in. So in this video, I'm going to break it all down by salary. We are going to talk about how much home you can realistically afford, whether you're making 75K, 100K, or 150K a year, plus what you can do to stretch your buying power and avoid getting in over your head. So let's start off with how lenders calculate what you can afford. And that's going to be the first step. So everything starts with something called your debt to income ratio, also referred to as DTI. So this is just a percentage of your gross monthly income, and that goes towards debt. And it's the main thing that lenders use to decide your max loan amount. So for most buyers, lenders like to see your total debt, including your mortgage, stay below 43 to 45% of your gross income. So let's say that you make $100,000 a year. That's roughly $8,300 per month before taxes. At 43%, that means your total monthly debt, mortgage, car payments, student loans, credit cards should stay around $3,500 to $3,800. So that's your comfort zone. Now how far that gets is really going to depend on where you live. It's going to depend on your down payment, and it's going to depend on what's happening with interest rates. So step number 2 is going to be breaking it down by salary, and let's talk about that. If you're making around $75,000 a year, that gives you about $6,250 a month to work with, using that same 43% guideline. Your total housing budget would be around $2,600, somewhere in that range. And that can translate to a home price of around $325,000 to $375K, depending on your interest rate, down payment, and property taxes. In many parts of the country, think Raleigh, Charlotte, Dallas, or parts of Florida, that could get you a nice townhouse, maybe a small single family home, or maybe something newer in a developing community. So if you're making $100,000 a year, your housing budget jumps closer to about $3,500 to $3,800 a month, which usually supports homes in the $450K to $550K range. That's where a lot of first-time home buyers land. You can find solid homes in places like Phoenix, Nashville, Tampa, or northern parts of Atlanta in that price range. In higher cost areas like my state, New York, Los Angeles, the Bay Area, that same income might mean smaller homes or condos, but the principle is still pretty much going to be the same. So if you're making $150,000 a year, your housing budget rises to about $5,000 to $5,500 a month, supporting homes up to around $750,000 to $850,000, depending on your loan type and local taxes. That's where you start seeing more flexibility, newer construction, larger lots, or upgraded homes, especially in mid-sized metro areas. So the range is really going to depend on where you're buying and how your loan is structured. So now let's talk about a few wild cards here that can change a lot. Here's where people really get tripped up. Okay, your salary isn't the only thing that matters. So let's talk about the 3 biggest wild cards. And I'm going to start off with the first one, which is going to be interest rates. So even a 1-point change can swing your buying power by tens of thousands of dollars. So for example, at 7%, a $500K loan costs around $3,300 a month. But at 6%, that same loan drops closer to $3,000. That's a $300 monthly difference, or roughly $50,000 more buying power. Next is going to be property taxes. Now this varies wildly across the country. For a $400,000 home in Texas or New Jersey can carry $9,000 to $12,000 a year in annual taxes, while that same home in parts of Florida or Tennessee might be half of that. Okay, that's why your location really matters more than your gross salary when it comes to affordability. Number 3 is going to be your down payment. So the more you put down, the smaller your loan and the better your terms are going to be. So putting down 5% to 10% can make a noticeable difference in your monthly payment. And once you hit 20%, you're going to remove PMI, which can save you hundreds a month. So don't just think about how much you make. it's really important to think about how much you can comfortably put down and still have money left over for closing costs, for actually moving, and also maintenance for in case something breaks down, right? So next, let's talk about realistic affordability tips, and here's how to stay smart about this. So first, aim for comfort, not the max approval. So if a lender says you can afford a $4,000 monthly payment, that doesn't mean that you should go that high necessarily. It's always important to leave room for savings, repairs, and just life in general. So second, factor in future costs. If you're buying new construction, remember that property taxes, they often increase after the home is reassessed. If you're buying an HOA community, check whether those fees are expected to rise, because that can make a big difference. Okay. Next, it's very important to shop your loan options. I always tell people this. Different lenders and programs have different debt to income limits, down payment requirements, and credit score minimums. Okay. So even 0.5%, it sounds like it's not a lot. 0.5% better on your rate can mean thousands saved over the life of your loan. And there's so much you can do with that. Some great vacations, so much, right? So here's the bottom line. It's not just about what a calculator says you can afford. It's what fits your lifestyle and what fits your long-term goals. So if your salary gives you a framework, it gives you a framework, but the real key is understanding your debts, your down payment, and local costs, and how they interact with each other. A $100K salary looks completely different in a place like Kansas than it does in New York, and that's okay. What matters is finding your balance point, the number that you can comfortably own, invest, and still just be able to enjoy your life, right? Because you still, at the end of the day, you want to buy a place to live, but you want to be able to enjoy your life too and do the things that you love. So if this video helped you understand how much house you can actually afford, then I'm going to encourage you to click the video right here on your screen to watch my free webinar, which is called How to Go from Hesitant to Homeowner, How Smart Buyers Can Win in Any Market. Click that video right now. I look forward to seeing you in the course, and I'll see you in the next video. Take care.